Hi, this is Brent from TradeGuild.blogspot.com, and it is Saturday, September 9th, and I'm going to just go back and recap some videos I posted last Saturday, a couple positions, and see what happened since then. First up is HH, which is Hooper Holmes Inc., Specialized Health Services, and this has been on the blog for a long time on the predication of this big symmetrical triangle. We're looking for a breakout from that. The initial idea actually was brought by Sensei Kato on our tag board, and we've posted a couple of videos on it back here when it was within this triangle, and we saw a breakout, nice breakout over here. It was up 8%, and this is what the stock looked like on Saturday when we started talking about it. And basically I said, I think, judging by money stream and a whole bunch of other things and the size of the base, that we're probably in for a pretty sizable or nice trending rally. And since then, let's see what's happened. We talked about maybe a chance of a little pullback here. On September 6th, actually, I said maybe we would see a pullback to about a 10-day moving average. So let me go ahead and show you what a 10-day moving average would look like here. And this is going to be in yellow. So here it is there. And we talked about maybe a little pullback coming. So we got close here on this day, down to about 318. I think the moving average sits at about 313 or so. And the next day, look at that, up almost 17%, 16.77%. So this is kind of, I'm not sure I expected to see a 17% move, but we did expect to see more upside, and that's why we said, continue to hold. At this point, I think it makes a little bit of sense in the short term to take some off the table to lock in some of those gains, and perhaps you can buy a pullback, I don't know, maybe to that 10-day moving average again, maybe to the 360 level, somewhere in there. It may continue to go up. That's why we don't want to take all of our gains off the table, but I think it's wise to lock in some of those gains in the environment that we're in right now, which is kind of dodgy, short and back and forth. So anyway, that's HH. Let's take a look at our next one, which is Intel. INTC is the symbol. And this is another big symmetrical triangle functioning as a base, and we talked about this in videos back here before it broke out in August, and we expected to see a breakout, and that's what we got. So this is what the stock looked like on Saturday morning last week, and particularly interesting was this little kind of almost a hanging man. It's not quite, but I think it functioned in the same manner. We didn't see too much price appreciation on that little increase in volume there. So I expected to see a pullback, and I talked about on Saturday a pullback maybe to this June, July area in here. There's that pink marker again. I don't know what happened there. I used to have red. Anyway, so let's see what happened with Intel. Yeah, there we go. It pulled back just about to that level, and on Thursday, it put in this little doji right here on the downside, kind of a morning star doji, which suggests a reversal. Sorry about that. And there it is. And hopefully we'll see that that little temporary bottom hold, and we'll see a little bit of rally from there. Intel's had some news out. They were going to cut up to 10,000 jobs. I think that number may have been revised down a little bit. But in any case, it seems like it didn't hurt Intel one bit whatsoever. Let's take a look at HYC, HYC, Hypercom Corporation. And this is what it looked like on Saturday. Friday, actually 8 days ago, I said that in intraday trade, I said on this day that we were seeing distribution, and I put a short call out on the tag board. And I jumped in around 2 o'clock in the afternoon, and actually it was this day, I'm sorry, and it was up around 9:40 at that point, and it closed down to 9:06, so we had a nice 4% gain on that day. And I said on Saturday last week that this was distribution, and we can expect to see some more downside here. So that's pretty much what we got all this week, down to 847. There's that little doji star there. On the intraday chart, let's just take a look at the intraday chart real quick with money stream, and I'm going to pull up a 10-minute chart and see how that looks. Waiting for that to load. Okay, let's try something else. Alright, well, in any case, on the intraday chart, we saw some buying Intraday wise, not anything big that's going to spook us out of a long-term position, but I decided to go ahead and close out half that position earlier in the day, and I put the money elsewhere. And towards the end of the day, I said, you know, I'm just going to close out the whole position, and maybe I'll get another chance to short it up around 880, 890, somewhere in there, around that 50-day moving average. So we'll see how that works out. But for now, I'm out of that, just on the fact that I think this doji occurring at this 200-day moving average is likely to see a bounce at this point. How far? You know, I don't think it's going to be much, but it gives us an opportunity to get in higher and just go ahead and lock in those gains. Let's take a look at National Semi. And National Semiconductor is one we were talking about breaking out of this triangle here, the symmetrical triangle, and it broke out nice like we expected it to, and it pulled back. And I was saying, you know, it's acting pretty well before earnings, and earnings came out, and they actually beat consensus on the street, but I think they lowered their guidance for the next quarter. Don't take that for gospel. Go ahead and look that up, but I think that's what it was. But anyway, the stock really, it got a pretty nice shakeout here Friday, but it held up pretty well. It still stayed within this little consolidation formation that's forming after this breakout. So National Semi, you know, I'm not sure that I would hold it below this 2350 level, or perhaps below the 50-day moving average down here around 2325. But it sure has held up pretty well considering, so that's one to keep an eye on. We talked about PWEI and a potential short squeeze there, and that this one was in an ascending triangle, and this is what it looked like. One of the things about ascending triangles is they can turn into something else. You know, if you judge it too early, you know, you may not have seen the full pattern develop, and I think that's what happened in this case. And it's starting to look a little bit more like a rectangular consolidation here. So if we're going to play this potential short squeeze, we want to go ahead and buy, you know, down here towards the lower levels of this consolidation between $32 and $33 maybe, and have a stop. I would say at this point I would keep it under this 50-day moving average considering this formation, so around 31.25 maybe. Let's take a look at VCLK real quick. And this is one that we said was pennant-like, and it has started to widen out a little bit more. It's a little, you know, last week it looked a little more like this, so it started to widen out a little bit more. But all in all, I think that it is still in pretty good shape. Look at money stream there and a leading divergence. So I would, you know, if I was in VCLK, I think I would stick with that position. My stop, I'd probably widen out just a little bit here, considering this pattern is widening out. And I'd say about 1660 or so would be my stop on that one. Let's take a look at FMC real quick. This is FMC Corporation, their chemicals. And what we talked about was, you know, that it is struggling with this 50-day moving average. I initially set a stop somewhere around $62 last Saturday. So actually, you would have been stopped out on this day at 62.11 had you taken that as gospel, which it really isn't. It's just a you know, a rough measure to give you an idea, and you know, you make the trade your own. But in any case, it's still, even though it had a pretty nice up day here on a little bit of increasing volume, I think until it breaks this 50-day moving average, this stock is suspect. That 50-day moving average is turning down, and I think I still like this as a short position here. Let's take a look real quick at oil, and this is one actually I posted a video later in the week at September 6th, but if you go back and read my posts about oil, I have been talking about since mid-August, when prices were up around $74, that we were going to see a pullback down to around $67, or more accurately to this trend line that is developed in red here. And that is what we have got almost exactly. It just pulled right to it like a magnet down to $66. There's the trend line. And you can see the 22-day moving average is crossed below that 50-day moving average. And oil is going to do something in this area. So we're going to watch it the next couple days for a potential bounce on technical buying. But it could also break through that trend line, which would be very bearish and would possibly lead to a further bounce and further weakening. So that's going to be it for this video. I'm going to be back with another. So I'll see you just in a few minutes.